To another Pepperstone live stream here. Today, we've got a bit of a special one because, of course, we're starting our live series where we go through pairs and we cover the hottest pairs for the week. And we'll be doing it every single Wednesday at 8 p.m. AEST, I believe, or AEDT, depending on daylight savings time. And basically, this is going to be something that we're doing every single week. It's by high demand. If you enjoy it, make sure to give it a thumbs up. And that's because we're always going to be going through the topical conversations. Whatever pairs are most popular right now, we'll bring that in with the rest of it. And as we always do, we encourage that you, everyone out there, ask questions throughout. So feel free. It's a very interactive kind of live session. Feel free to ask questions and we'll answer them throughout and at the end. My name's Thomas Atkinson. As always, I'm joined by Ty and Abella. How are you going this week, Ty? It's a big week still in earnings.
It is, following a very big week last week. Welcome everybody. We are very, very excited to bring you live analysis. It's what we do. It's our bread and butter, Tom. We do it all day, every day. And we're very excited to bring it to the Pepperstone audience because I think it gives us a chance to give continuity into what the market is actually doing from week on week. We're going to see a base set of instruments that we're going to have a look at every single week so you can see how they're flowing from week to week. And then, of course, we're going to start looking at what's actually hot in the markets now. So there's going to be something for everybody. I think most importantly, though, we're hoping to bring a benefit to everybody out there to give you some analysis that from our perspective, but also the continuity of actually seeing it play out week on week that really gives you the confidence to understand that we understand what the market is actually doing, Tom. So, looking forward to it.
Yeah, so we'll start off here, Ty, with a great pair, and I'll just put a watermark on so you guys can all see it. Basically, it's great to have a watermark in the trading view, whatever you're looking at. Now, we're using US dollar index futures here to start off with, and the reason we're doing that is because this is really, there's a difference between sometimes the spot and the futures, and sometimes it's worthwhile doing that as a trader. So I guess that's something that you might want to do in the Trading View platform, and obviously you can connect your Pepperstone account to it, and then look at the dollar index spot as well, which is a tradable pair here. Now, the reason we're going to start on US dollar, and then, of course, we'll go over to the indices, then we'll talk about some of the others, is because of the way we want to construct a thesis. And at the moment, Ty, and I think for at least the foreseeable future, the US dollar is the most powerful currency in the world. So what it's doing can often tell us a little bit about risk on in markets and risk off in markets. So here we have the US dollar, and you can see that it's breached past this little red zone here. Now, this area here is what we call a supply zone or a resistance zone. And it's actually both theories together, which I think is really excellent to see. And I seem to have just lost the drawing there. There we go. So basically, we've got here the supply, and it's also a resistance. So this is a fantastic level for us to be looking at on markets. And Ty, one of my favorite things to do is always to be bringing to confluence together. So we'll explain why it's both in a moment, but it's great to build confluence, isn't it, in when you're doing analysis?
Most definitely. It gives you the confidence that what you're seeing is being seen for all manner of reasons by many, many other traders. Of course, the more people that are looking and seeing a level, the better it's going to react to that level. And probably just as importantly, Tom, we know that a level that's produced like that is going to give institutional money at that level as well. So it's going to have a reaction from volume. We're going to have potential momentum play. There's all sorts of reasons why confluence is important. But when we're bringing together, we like to aim for anywhere between 3 and 5 different reasons to actually buy or sell a position. We're looking for 4 or 5 different reasons, really. And if you can get them, it gives you so much more confidence. Now, you look at a level like that and you think, look, straight off the bat, we can see it is a zone that was previously tested. We know that there is supply and demand at that area. It's a round number. They're the things that we're looking for. There's a candle structure there as well. And it's if we draw a fib, it's going to be probably a 38.2 pullback on that move down. There's all manner of reasons.
But actually a full 61.8 is just tapped here. So pretty important level overall from that top period. So the thing about this is what we've got here is we start with a weekly. Now, you might take and trade a daily, or you might trade a 4-hour, you might trade a 5-minute chart. Still good to start here because what happened recently, and we'll just break this down, is we broke through a downward trend. Now, that's the trend line. So that's a trend line confluence that happened. We had a series of lower highs and lower lows on the way down, and then suddenly we snapped it and changed something. So it makes sense that at this point, we're probably moving towards the next level of what Tyron and I call equilibrium, which is the next point of resistance support or where the market's going to have positions. And you'll find that whether you're a market structure, a supply demand, a support resistance, a price action only based trader, an indicator based trader, or a positional based trader, which are all different terms, very similar things actually, you'll find that you generally do build these confluence levels. So in my opinion, it's great to have that kind of analysis for both of it, or for all of those reasonings and points. Now we'll notice here, if we go down to the daily, the reason this has become so important is because we have to understand now the theory of supply demand. So we mentioned before that we have resistance. Now resistance is kind of going through those high points, which we're here on the weekly candle. But when we break it down a little bit more, we have to think, where were the positions placed, Ty? And it makes sense that it's finding a little bit of resistance here, because when you look at the dollar index, you'll notice it drops really heavily and it sits there and forms a base and it drops again. It's what we call a drop, base, drop. And it's a supply demand style theory. It's one of my favorite kind of just basic setups. And then what you're looking for a lot of the time with supply demand is you're looking for the market to come up and retest it. So you can see it retests it once, it retests it twice, and then it retests it 3 times. Now, a novice to this is going to think, or just a standard, other techniques, is going to think that this is the resistance and we've broken it. But really, it's this supply that we're acting off. It's the positions here. And each time it's come into it, we've tested off those levels. So really, until we get through this high here, we can't be sure that the dollar index is super long. We can suspect that it's looking better. So, of course, we can say, okay, if we're going to go with any trend, Ty, it's going to be the bullish trend, because, of course, that's how it's looking at this stage. But we have to be ultra cautious around here. So it gives opportunity for scalpers and day traders, upon seeing this, to say, I know what most people are going to be thinking. I know that it looks really strong. But at the same time, we now need to drive down into smaller timeframes to see whether there's opportunities, don't we?
Yeah, most definitely, because as much as the level can look stronger on the bigger timeframes, you really have to identify if that momentum is actually set to continue. Well, first of all, we've found the roadblock. There is a potential roadblock there. So we need to be comfortable that that roadblock is going to get broken. So really, the only way we're going to know that is to go to the smaller timeframes and identify a series of higher highs and higher lows, or the opposite, a pattern that might actually be selling it off. And as we can see here, we've got a topping pattern on the smaller time frame that needs to be paid attention to. It's a double top, right? It's a neckline right at it, at a very, very important zone. And this is why we always look at the different time frames to really get the true picture of what's going on. Only a novice trader would look at one time frame, Tom. Every professional trader that we've ever come across will always look at least 2 or 3 time frames to get a perspective on, one, what the market is actually doing and where price is at relative to where it has been. Absolutely. And also the smaller time frames to understand what the short-term momentum is actually doing. Is it giving you a signal to stay the hell out of it? Do we trade against the double top on a 1 hour or a smaller time frame? I wouldn't, and until that double top has actually either failed or price has actually moved on and made a high past those peaks. And that's giving us a confirmation that we need, that the longer term momentum that we saw on the bigger time frame is actually continuing and going to break through that level. So that's why it's so important to go through the smaller time frames.
Yeah, so straight away, Ty, the first thing I'd do here is I'd set an alert above the highs. I think it's such an important momentum break zone. We know that the supply is there. We know that if this level does get tapped again, unless it's instantly rejected, it's highly likely we're moving to the next level. And if we did really good analysis on the higher time frames, such as the weekly here, then we would be looking at probably the next levels, which would be somewhere around that 105 kind of 80 zone. So really, if this level is broken, I don't think you generally want to be short unless it went boom and then instantly busted back down, and then you'd have to react to that, okay? But in general terms, from here to here is more likely especially if you get a closure above this area. And I think you would agree with that. Of course, we use very similar styles, guys, but actually Tyron and I have even sometimes a little bit different, which is good because it means you have differing opinions sometimes. And that is important whenever you're doing analysis.
Absolutely. But I think it also speaks to what we're talking about. And this is why you need to build confluence, because even though Tom and I work very closely together on a daily basis and have done for 14 years, we still have different ideas on how we actually get into the market. But quite often they're in the same direction. They're just for different reasons. And that's really speaking to, what the rest of the world is doing when you're placing a trade. There's all sorts of reasons why someone might be going long or someone might be going short. The important thing to understand is why the majority would be doing an action and working with that action.
So we have a resistance alert that we're certainly going to want to be looking at from a technical perspective on these timeframes. Then we come in and we noticed here, and I wrote this as demand zone. All of this is kind of a demand area. It's a level where you could see that maybe this topping pattern is going to also show its distance. So the distance generally for a topping pattern would be A equals B. So in this case, these are pretty similar. So you'd almost say it's actually hit the first initial take profit. Doesn't mean it was an easy trade, by the way. That may have been something you don't get. But now we're in a demand area. So we know the overall trend is still up. We know that if we breach underneath this level here, Ty, I think it'd be fair to say that there's some issues with this trend. Would you agree? If we go there. So really, if we're going to be a bullish kind of person on the smaller timeframes, this is the type of area we'd be looking at. Would you agree with that as well?
Yeah, extraordinarily important zone. And there's a trade on either side of it. It really just comes down to what the market actually does. And that's why patience is key.
Patience, react.
Exactly, 100%. We're not predicting which way it's going to go.
Yeah.
We're going to act and react when it does actually go, and that's the important part. We're going to be patient enough to wait for it to make its move, and then we're going to react to that move.
So you might suspect that this area here might contain some kind of buying demand. Now that's a suspicion. As Ty said, you've got to really wait for it. So what we're looking for here is we're looking for the market to do some kind of lightning bolt style scenario where it's getting stronger, and more importantly, breaching through previous points. So you'll notice here it's going down a series of lower lows and lower highs and lower lows. Now, if it switches to a higher high, that can often be considered what we call the first time frame change of trend, as in it's becoming a little bit stronger. Now, when that occurs, that is important. It doesn't mean it's the absolute, it's a great, you have to always every time go for the go signal. But I do think that this is the first sign of at least price action discovery telling you that something's changing. Now, if you have a system that might be built out with other moving averages and other concepts, you might be getting a little bit of edge here. But you'll notice that what we did was we built this structure based on higher timeframes. We're now in a 15-minute time frame, which is more where a scalper and a day trader will sit. So could we be interested in this trade today? Yeah, possibly. Now, what I found, Ty, is again, people waste too much time watching paint dry. I was the one that started doing this. You did it as well. We used to have, I remember it was like shifts. You do this 8 hours, I'll do this 8 hours, and then we'll cover the market. What a ridiculous concept. What would have been better? And you didn't actually really have it back then. You had to pay, was it $1 a text or something? It's pretty wild.
Yeah, it was.
And you didn't have alerts. So again, something that might trigger some interest here would be to set an alert above these highs. So I think what we've done here is we've figured out that we're at a pretty critical point for the dollar index. We're at a point where if the dollar index does start to find buyers, that it's probably telling us that there's risk off around the world, which could help us with an index play later. Because of course, if the dollar is strong, it does have an inverse or like a bit of a relationship with the S&P, especially in recent times because of monetary policy. And we're also probably getting a little bit of an idea about the euro as well. So we could probably say that while the euro has probably been weak based on the dollar index, it's highly likely that the euro has started to recover off its base, at least for now. And there's a question in the room, Ty, and it's about the Australian dollar and US dollar. This is from Royston. And he says here, whilst the dollar is so strong, the odd USD and the New Zealand USD seem to be gaining strength and building a trend. What is your view of these pairs? We'll check them out later because it's a great pair analysis theory. But what's probably happened is the dollar index has weakened in the last kind of 24 hours. And that's led to the odd, which was probably critically oversold, and New Zealand starting to find some recovery. Yeah, so dollar index, critical point, worthwhile setting alerts. Obviously, you've got to start to think about your own systems on this type of thing. But in terms of the analysis we do every week, we're looking for critical zones that then we can potentially react to if we get the right kind of signals. So I think that's probably a breakdown of the dollar. Would you have anything else that you think is worthwhile for people to know, Ty?
No, I think what we'll do is let's jump straight into the euro with its being its inverse, and then we'll have I don't think we have to spend a lot of time on the euro because really it is basically inverse of what we're talking about there.
Yeah, exactly.
No question. It's found a level of very heavy support at this point. This is what we call a roll reversal zone. We have got support there where we saw the yellow circle. We've got resistance just prior to that as well. So that makes that sort of 1750 ish area a pretty strong zone. We know that we've got issues there on the way down, but what that's giving us is it's a real point of interest because we know that in order for the euro to continue down, that dollar index really needs to actually break that level and go up to at least probably that 105 or 105.50 level that we really need to see. Yeah,
So
quite
this
opposite
is
to what
the
we
same
saw,
as
double
that.
bottom. Yeah, exactly right. Basically, the
Yep.
double bottom there, and off we go. This pattern, however, is a little bit more advanced. So this double bottom pattern has actually broken the neckline. I'm not sure if we're looking at the exact same time frame there, but if we're looking at this from a pattern standpoint, we can see that this one's already broken the neckline, but it's found itself at a level where there's certainly interest at the 107.80 to 108. There's no question about that. So it's a critical zone. And I think that's probably the important part, Tom, of, we do spend, like touching on what you said earlier, we can spend a lot of time in front of the charts trying to find a trade. But in reality, we know what we need the market to do for us in order to place a quality trade. Setting the alerts is going to save you an extraordinary amount of time, because it's really as simple as it breaks that supply zone and continues to trend higher on a smaller time frame. We're simply going long. And if it turns around and goes short, we know where our take profits are going to be on the move down. And then, if that double bottom does get taken out, all of a sudden we could be, tracking like a magnet down to 106. So we've got a very good plan on both sides, and there's no reason for us to sit here and count candles. All we need to do is actually set an alert on either side of those zones. We understand that this is a very crucial zone. We're going to be patient, and we're going to wait for it.
Yeah, so I think the thing is, if you're a shorter here and you're thinking, okay, I'm looking for euro weakness, you're more interested in this supply over on the left-hand side. So you're really interested in that level being hit. Now, the overall trend, if you go to something like a 2-4 hour daily, that type of thing, it's all going to be down. So therefore, the trend is your friend theoretically. If you're a beginner trader, it is usually better to go with the rally into weakness. Which you have to expect here because, of course, it's a critical point. Now, we also know, as Ty said before, the 107.20 is a level where if you breach through that, you've got that clear next level, which is based on the weekly chart and the daily chart. So you can see how important this support is. You can see the next level that could be down here. So pretty clear cut, I think, for the euro. I want to load the odd, Ty, just because, and we'll do that with the Pepperstone platform here, just because we got to ask the question. It's a very similar type of setup. With the Aussie, we managed to get into this level down here. Now, this is a very critical point for the Australian dollar. And it's actually, once it broke below this, it was very likely to go here. It's a very good level to see demand come back into the Aussie. So that's semi-expected. Now, Ty, I know this pattern, so I know everyone's looking at it. What are they looking at? Let's see if anyone in the chat knows the pattern. I'll keep talking about the price action. But you'll notice I've already got a set alert here. So it's very
absolutely. I do see it. Royston, I'd be interested for you to actually just let us know what particular time frame are you referring to where you say that the Aussie is gaining strength, because on the daily time frame, there's not much strength being had there. So are you looking at potentially a 1 hour or a 2 hour, or what time frame are you actually referring to? Because on the bigger time frame, it's definitely weaker.
Yeah. So weaker on the bigger time frame, but definitely hit a great level of demand. I would say 2 hours changed to the upside. And obviously there's what we call an inefficiency in here, which is a popular kind of concept in trading. Do I think inefficiency is valid? Sometimes. It's like anything. Sometimes it's good, sometimes it's bad. The big bit of news, the RBA obviously came out with its interest rate decision. We've seen a sell that's very aggressive against the Aussie. We've got some recovery here, but this is a higher high. So if we do get pullbacks, I think that scalpers and day traders may be looking at this 65 tie and trying to have a go at it. But conversely to that, if you look at some volume profile work in here, I could see a seller really like that level as well.
Yeah, Royston's confirmed he is looking at the smaller time frame. So probably anything from 2 hours onwards is going to give you a series of higher highs and higher lows, no question. So if this is the pattern you're looking at, the inverse head and shoulders, well, that's what I see anyway. It's an inverse head and shoulders here, which is basically opposing the bigger head and shoulders pattern on the daily. Definitely scalping material for people who scalp and people who are looking for that in and out trade that's going to happen relatively quickly. These are the sort of patterns that we're kind of looking for. And you're right, the targeted zone is a very, very highly contested zone in that high 65 cent to 66 cent mark. Very, very heavy.
Yeah, very big contested zone. So I like the low breach would be a pretty big deal. At the moment, I can see why you would look for recoveries. A pullback back to 65 could find buyers in terms of from a technical demand zone. And obviously at the moment, it's kind of gearing into try to rally to this point. Now, interestingly, it's trying to gear a rally that's a little bit higher than the euro. So we saw before the euro's only got a little bit of theoretical in it, whereas I'm choosing the Aussie and the New Zealand have a little bit more in them. But very interesting structure, and there are some good levels. But you'll notice I have an alert above this high zone here, because Ty, it doesn't matter what time frame you look at, from a market structure point, this is going to be a huge deal if it is breached in the future. I think for momentum-based traders, and also for swing.
A very, very big deal. And I think that, the Aussie is tracking fast towards either a 63-cent mark or a 68-cent mark. And which direction it goes is going to be, it's going to be based there. It must cross that circle there. And if it does, the 68-cent mark looks highly, highly lucrative, because that's pretty much where the next real resistance is, and it is the next very serious disputed zone. And you can go back a long way and see a lot of price action around that 68-cent mark. So very good trade either way, Tom. I'm really comfortable for it to do either, to be honest. I would be very comfortable with a break above that shoulder on that head and shoulders, or a continuation down. I think both of them are very valid trades. And I think there's probably 150 to 200 pips on both sides of that trade if we get that break that we're looking for.
Yeah, I think there's some really good trades coming up for the Aussie from that perspective. And I also like the fact that there's this massive opinion right now that's going around, which obviously is this head and shoulders, possibly the most obvious pattern you've seen in a while. Now, this one here is a obviously left shoulder, head, right shoulder. Now, if you actually take the distance, it's predicting a new low on the Aussie. Now, I'm not a huge fan of this, because I think everyone's talking about this pattern. Doesn't mean it's not the right direction. It totally is. But that's why I've also got this alert here, because if it starts to reverse, I can imagine quite a few people are on this type of trade. So if it does, don't know this, it may actually be stronger, the counter to this, than the trade itself. I doubt it gets full completion, Ty. And I think you've got to understand with patterns, sometimes you're asking a lot of this pattern. So the general concept is to take it all the way down here, which would push this narrative of a very big low, which is down here. It makes sense, but it's going to need some good work on it. Trends down on daily, trends down on weekly. Actually, I think it is. I think it changed it down. Yeah, changed it down. So we've got daily, weekly kind of down. We've got 2 hours showing us a bit of strength, and down below that. And obviously we have turn points in this structure. So a lot of great dissection of the Aussie there, and a little bit different to the euro and the dollar index.
Yeah, I think the dollar index is a key player in what happens to this Aussie. If we do see that break above 105 and 105.80 on the dollar index, I think you're going to see a reasonable fall in that Aussie, and it's probably going to go a long way to completing that pattern.
Sorry, guys, if you heard my cat then complaining. It's probably complaining about no pullbacks in the S&P 500.
The cat does not agree. The cat does not agree.
Yeah, I'll tell everyone a hint out there. Don't ever let cats open on a live account, okay, guys? You can't call Pepperstone and say, "Oh, my cat did it," because that actually did happen to Tyrone and I once.
It happened to us.
Traded.
The cat literally placed a trade.
Traded one lot a few times too. Sneaky cat. Anyway, so you got to be careful. Got to lock that keyboard down. Now, from the S&P 500 perspective, Ty, you've got a monumental level here. This is 5,000. You'll notice I have a watch reaction here.
Yep.
This is possibly one of the biggest zones that we've seen in a long time. That's because you don't often witness 1,000 level for the S&P. Now, I've gone through history, and it actually turns out that every single 1,000, you can go back and look at this, every single 1,000 we've sold around that level in previous times within 20 points either way, kind of 20 to 30 points either way, the first time, okay? Now, that doesn't mean it's going to happen. It's just very interesting. From 2,000, 3,000, 4,000, have a look. That's just a stat. Now, do we have any signs of it yet? The answer is probably not. And that's because the market continues to make a series of higher highs and higher lows. So why I bring that up, Ty, is because you might have a bias. Let's say you create a bias, and we'll talk a little bit about biases when you're discussing trading, and we're discussing these live sessions. Again, every single week, guys, sub down below. Give it a thumbs up if you enjoy this type of content. We're excited to do this, so we hope you are too, and you really need to show support if you do enjoy it. So basically, we're looking at this perspective of, we might think, okay, it's short 5,000, but the trend doesn't say that yet, does it?
No, it doesn't. And look, you look at the market and you can see it's starting to spurt. You know what it feels like, Tom? I'm not sure if you've ever done this, but people out there may have. You know when you've like nearly run out of petrol in your car and you can see a service station only like a kilometer or two away,
Yeah.
and it says zero.
Yeah.
The thing's flashing zero. You're out of fuel, and you're just really trying to get it to that station. That's what it seems to be at the moment when it's approaching these really key zones. I agree with you. Like, it's an extraordinarily important zone, the 5,000. But it seems to me that the market is just, it's going to probably get there, but I think it's not going to get there with the force that people think. And quite often what may happen, and it happened in gold not that long ago, you might just get a massive spike and it just goes straight through the 5,000, maybe 5,050. And like, oh my God, people think, oh my God, we have to get in because it's going to 6,000. And then all of a sudden it comes back and corrects to the zone where it probably needs to be. So just be very, very mindful of that although you might see a spike above it, everything is not leading towards a market that's going to 5,500, Tom. I don't think that that is the big game plan for the Federal Reserve. I don't think they need it there. I think they would probably be quite happy to see it, hover around these levels. The market's very, very healthy. It's not an unhealthy market when it's hovering at all-time highs. So we've got to be very, very mindful of that. There needs to be reasons for a market to go higher. Yeah, well,
healthy with 6 stocks.
I know.
I'm going to throw a stat out there today. This is the first time since 1929. The first time since 1929 that we have ever seen such bad breadth and reaching a serious high like this.
Yeah.
So the last time was literally only one time. It pretty much recorded stock history.
Yeah, I think
Very
that
random.
look, and if you want a tip for the day, and we love tips. We're going to try and give you a tip or a saying every week. Probably, if you don't already, always have a look at the Russell 2000 as a bit of a guide as to what's actually happening in the broader US market, because you'll find that it's not dominated by 6 or 7 stocks. It actually is a far bigger, it encapsulates 2,000 stocks, which is a far bigger reach of what the economy is actually doing. And sometimes it can prove to be a bit of a leading indicator to what's actually happening in the S&P 500. So just have a look at it out of interest. It's very tradable. I mean, Pepperstone have the indices version of it. It's a lot of people trade. It's very, very heavily traded, actually. And there's certainly nothing wrong with it. And I know in my streams, I look at it as a proxy every single stream. So it's a very, very important one. But just remember what actually the indice is represented by. And as it stands to reason that the bigger the number of companies inside an index, the more I think an economic picture you're going to get, Tom, of what's really actually happening.
Yes, and I think the thing is that you've got to really look at your sectors as well inside of your indices. So, say like Australia, for example, you might trade the Aussie 200. You'll need to know that it's financial, energy, and metals or minerals based, and a little bit of healthcare, and that's predominantly what the breakdown is. Whereas the Nasdaq, obviously, it's all tech. And growth companies. So we
got no tech in Australia. No tech. Zero tech.
Well, yeah, we had Afterpay. It's still technically listed.
Sure.
Anyway, that's a bit. We don't have it. No Google and Amazon kind of thing here. So let's have a look here at the US 500. So the reason I added the 20 moving average on is because you'll notice that's actually been rallying off the 20, and that's one rally, 2 rallies. And we've kind of got the 3 rallies now. So I think this is going to be a very important point for swing traders. And that's why, I'm bringing it up here, because I think in analysis, you want to be understanding where a swing trader is going to have something. Now, I've also got here 2 big zones, and we'll kind of just break them down. So first up, we have this low here, which is between 4,900 and 4,920 kind of area. And what we've been seeing there is at the moment resilience. Now, we've also seen some weakness around this point just from the fact that it's just kind of sitting there and selling a few times, but I don't think enough. So to really get a change here, we're going to need to see that 4,900 breach below. That's going to change it to, at least on the smaller timeframes, potentially scalpable towards the shorts. Otherwise, you are making a prediction really above here. And at this stage, it looks set to constantly move up. I mean, there's no reason that we've got yet, at least on this chart, without you looking at every indicator to go against it. You'll also notice if you put RSI on after this session tie or MACD, you're actually going to see almost every type of divergence ever on this chart because of the way it's gone up. Now, that doesn't mean that it's going to sell, though. Just because you get divergence doesn't mean it's going to sell. What it can do, though, is if it does start to sell, it can mean it's a stronger sell. So that means it could be more prone to a lengthy sell rather than a shorter time frame sell. I think that's a big delineation that a lot of people make huge mistakes on. So we've got 48.50, 48.40, and 49.10, 4900. And at the moment, of course, 5K being a zone that I would have an alert on all day long just to see what happens. And the reason we do this is because then what we do is we set alerts and we have those alerts if it happens. And guess what, Ty? If it doesn't happen, I'm probably not looking. And that saves you time in itself.
Absolutely. And look, the other important thing you have to remember is that you don't have to be the first person at the party. You don't need to be the first person trading 5001 and 5005. I actually mentioned it this morning in my morning stream that, if you're the person that turns up to the pub at 8 p.m. on a Saturday night, especially if you're looking for a party, you're probably going to be sitting at the bar drinking by yourself. No one's going to be there to buy you drinks, Tom. There's going to be no one to dance with, and that's because you're the first
Unless
one
you're in
there.
Vegas.
If you get there at 11 o'clock or 12 o'clock at night, the party is pumping. And by that, I mean, once it breaks the 5,000 and there's action there, you're going to get far more liquidity. You're going to get more people participating, which gives you a far better chance of actually trading in the direction that you choose. You don't want to be the first person there. Okay, so you don't need to feel the need to be the first person to take that 5001 point, because quite often, the reactions off those zones can be very, very violent. And they can take out stop losses very, very easily, even if you've got your general direction correct. So you need to trade with caution around these levels. I mean, I know we talk about it like it's a bit of fun and games because it's a very important zone, but it's a very important zone for a reason. Sometimes the market can have very violent reactions from those particular zones. It can take out stop losses a little bit sooner than you would ideally like. So just be careful. It's a place to be careful more than anything else.
So US 500, we've got two careful levels. We've got a big zone up here that Tyron's been talking about. Let's move on to gold now. So what that's actually suggesting is that we're at a critical point on dollar index. We're also at a critical point on the S&P. If dollar breaks high, it could be a bit of a warning sign towards S&P risk off, and of course, euro, et cetera, et cetera. So we'll be watching all those pairs. Now, gold is a conundrum because this thing is actually quite stuck. And what I mean by that, Ty, is we've got a massive level above this 2050. So it's about 2000, I think it's to 2055, a closure above that, automatically big resistance breach. Obviously, you may want to get above these wick highs, but a closure will be still very significant. And then you've seen a lot of accumulation that's down here between around 2003 to around 2020. Now, the problem is you've got stuck buyers and you've got stuck sellers. So in essence, what are you doing? Well, you're chop sitting. And that's not really the place that necessarily a swing trader wants to be. So you might just set alerts and say, I'm not interested in it. A day trader or scalper, however, may come in and say, okay, well, I like 2020, I like 2055. And if I see signs of weakness here, and if I see signs of strength here, I might want to buy here and I might want to sell here. So you may have signals on that. And that's what higher time frame analysis can help you with. Then you start to drive it down. Now, I am frankly thinking that it's in the middle of the zone. You'll notice I've got a yellow line through here. And the reason I know that is because this is actually the most positioned zone over pretty much the last 2 months. So what you've been seeing here is just the market swiveling off this level. So this is the most traded zone. So where is the market right now? I would call it at equilibrium. I'm not sure if you have too much of an opinion on gold, Ty, but until it breaks out for me anyway, I don't. What about what's your hot take on this one?
I think it's an extraordinarily difficult trade for a swing trader right now. I think if you're a day trader scalper, I think there are opportunities as long as you understand those two zones that we just talked about, anywhere between the 2020 to 25 and 2050 and 55 is open season for potential scalps intraday or intra-session, if you like. But anything outside of that, I think is a very dangerous game because I think it could break. It's really, look, it's going to be very dependent on what the broader world does, really. What the indices do, what the dollar index does. So it's in a bit of a holding pattern for mine. And if you can take advantage of those smaller moves between that $20 and $30 zone, I think that you can get some trades in if you go to the really small time frames. But from a perspective of trying to pick a direction, whether it's going to go to a brand new high back at 2150 or whatever level it needs to reach, or indeed go back to the 1950, which is one of my favorite zones. It can do either very, very easily, and I'd be very, very comfortable with both trades. But I think it's really important, like Tom said, to understand the two key markers here are the 2050 and the 2020, and a daily break either side of those two lines, I think is significant, and I think it will give us. It'll probably give the swing traders, which is predominantly what we like to do, a chance to get some momentum in either direction. I think both of them are very sound trades.
Let's talk momentum for a second there, Ty, because I've got the random stock of the week that we're looking at, or random in this case, index of the week. So we're always looking at different instruments. And we're going to use the HK50 for a second here. Now, this is absolutely a despised market right now. But I believe we're starting to see signs of potential recovery. We've got intervention. I just got a new text alert then for some big news in terms of regulation changes and everything that's happening over in China. Now, it has been a burnt market for a long time. Just giving it a weekly analysis, you'll see what I mean. But you can also see that we're starting to get into that big demand zone or that support zone here. And I put a trend line on the charts because for me, this is one to watch this week and actually at a critical point. A trend line that could breach, that's already shown some signs of life. A very strong move over the last couple of days as well, like a big move. We saw the equivalent to maybe the NASDAQ, in China move quite heavily over the last 24 hours. This market here could be poised for a bit of a trend change. And I think that's a very interesting point. So what are your thoughts when you look at this? Obviously, it's trading, so it's not without its own dangers. But could we be seeing a bit of recovery moving forward if we break certain levels such as 16.5?
Yeah, what I like about indices the most, Tom, is that it's not just like trading a stock that could technically be sick from things that we don't or are unaware of. An indice represents a particular, many sectors actually, but a particular country in this instance. And really, when you are getting news alerts, it does affect the broader index where, an individual stock can be a bit different. It can be sick and just not recover, even if the indice of that country is going particularly well. So when I see a pattern looking like it really wants to break, I mean, these are the things that we look for. It's been absolutely belted. There's no question about that. And this is the first time really that we've seen in quite a while a significant shift in what could be a momentum change. Now, there are a few things that we've highlighted here. We talked about the confluence. We've got, a potential lightning bolt to the way up, just about to form. We've got a break of the trend line up. We're finally trading above the 20 moving average again. They're three very, very important reasons. But probably one of the even bigger reasons than that is when we went to the weekly chart, you saw that the previous extraordinary sell-off happened at around this level. And this is where it actually also kicked up. And the reaction, the V-shaped reversal that happened the last time this happened, way back at the first trough there, was extraordinarily violent. Like that was a violent move up. Like you could see how fast it V-shaped.
Intervention back then, and
it was
we're starting to
intervention
see similar types of things.
Exactly. So these are the things that we're looking for. So we've given, 4 very important reasons why this could be a turning point in this market. Now, it's still got a little bit of work to do. It's not there yet. But there are certainly signs that there are potential change in this big, aggressive move down and sustained too, Tom. It's been a sustained move for so many months now that, it's something that if it does reverse, you could see, quite a bit of action on the way up. Every single pit stop that it made on the way down is a potential take profit on the way up. So I think it's a very interesting index to have a look at. Keep an eye on this one because there could be some good opportunities. And again, this is one that it's quite heavily traded in the Pepperstone environment. Like it's accessible to everybody. And it's certainly something that you can trade very, very freely and easily. So certainly put it on your watch list because it's one of the ones that's promising. It's really the opposite of what the rest of the world has done, Tom. Like everyone else is pushing to new highs. And this one's pushing to extraordinary lows. So I do like I like the bad apple sometimes, Tom, because you can still make decent apple juice out of it.
I like the bad apple when it's gone through a 2-year sell. I mean, obviously, it's pulled back, basically recession style. Like, we're talking a recession's been priced in to a degree, even almost a great recession when you're talking about. Imagine if the S&P 500 fell 75 to 80%.
Oh, my God.
People,
yeah, exactly.
Well, that's what it's effectively done off the
and I
highs.
think people you need to be aware that we're talking about an entire economy here. Okay, we're not just talking about a company that had a bad earnings report. This is an entire economy. So
this is reflective of it. So if you start to even branch out to the bigger amounts of stock, some of them even worse. This is just 50, but there are a lot of Pepperstone Asian ETFs that show very similar things, especially the ones with China. So, Ty, we've got, I mean, they will impact off AI. So it's an interesting conversation. Obviously, it's a bit of opinion based on, technical analysis as well. There's just, this is just an idea and a concept. Now, obviously, you do need to have your risk disclaimer and everything. So make sure that you do have that, guys. We'll pop that on the screen here for a moment, just because you've got to make sure that you take your own, consideration in, and obviously put in your own risk. So we'll be back in 1 second. All right. So what I guess the other pairs, Ty, was there another one that you had this week that you thought was a good cover? We've gone through some of the majors, but what other things have you been looking at?
I wouldn't mind actually having a look. One of the most popular things that I've been getting asked about is actually JP Morgan, and I know it's something that we can trade on the Pepperstone platform. I know it's a very popular US stock. So I think probably a highlight of that. We'll pop JP Morgan up on the charts.
I'll look at the main stock code, but obviously you can trade it inside the Pepperstone platform. I'm just looking here so we get the pre-market on it. Yep.
So as you can see, this has been in a very, very large uptrend. There's no question about that. And it is approaching, just like the indices, basically an all-time. Well, it's a very recent high that is pushing. Yeah, all the earnings are out of the way on it now. Okay, we've got the news. Everything is out of the way for the most part. Most of the earnings is out of the way in the US. So what we're going to see now is a continuation either of strength or a potential pullback. And if the indices pull back, you can generally bank on the banks doing the same. So this has had an extraordinary run. Apart from the pullback that we can see to the 20 moving average, that move down, basically that move up before the down move to the 20 moving average is extraordinary. Like for a finance stock as big as JP Morgan is, that is an extraordinary move. Okay. With all the earnings out of the way, the fact that it didn't bust through and make all-time highs is a very, very interesting concept. So I would be watching this with a great deal of eagerness, if you like, because if we get a break below the 20 moving average and we start to see a sequence of lower highs and lower lows from on a daily chart, something like a daily chart that's going to give us the best flexibility in what the market's actually doing medium term. The pullbacks can be quite rewarding on this one. I'm not saying it's going to go all the way back to the bottom. Highly, highly unlikely, but it hasn't had a serious pullback. And for whether you're an investor or whether you're a trader, both of them you should be interested in, because if you're an investor, this is probably not the place you want to be jumping into a stock like at almost all-time high levels with indices at all-time highs. I don't think I could think of many worse places to actually enter as a long-term investor, Tom. You're looking for that opportunity to actually get a bit of a pullback. So, and this may well be the place where it can come. So I would be looking at the short-term price action and seeing if we can actually get a little bit of momentum on the way down. Firstly, break the 20 moving average. And if we start to see a sequence of lower highs and lower lows, there might be a little bit of action all the way down to the very least, probably 165. And then you have to go out quite a bit. The next real level is around that 160, because that was a previous resistance level before the almighty run started. And that may seem a little bit unrealistic right now, going to a $15 pullback on this stock. But if it starts to get a little bit of momentum down and the indices are correct, even to maybe a 46 or a 4,700, which is not really that big a correction, JP Morgan could quite comfortably get to that level if the price action starts to move down and momentum shifts.
Yeah, so a lot of the banks have done this. Obviously, regional banks have been suffering a lot, though. So there's a huge divergence between those. I'll just put KRE in here. Just it's an ETF. We don't trade on the Pepperstone platform, but I don't really trade it anyway. But it's just an interesting concept here, just to see the weakness that's in the regional banks in comparison to JP, which is relatively strong. A huge divergence there, arguably probably one of the bigger divergences that we've seen in a while. So that's like a code where you could actually go JP Morgan versus KRE. I don't really know what this looks like on a chart, but I can assume it's outperformance for a while. Yeah, so since October, the outperformance of JP Morgan has been significant. And really, for a while there, up until pretty much the banking crisis period, we've seen, in general, JP Morgan just absolutely clean house when we're talking about in performance to the regional banks. All right, let's go to another pair, which is Tesla. And this is from Zachary's question here. Tesla, always a very, very important stock with retail traders. So not a great announcement in general. Obviously, we're not going to here to talk about fundamentals. Let's talk trading levels. So 164 is an interesting return point, and the reason is you look at a higher time frame, and you'll see on the left hand side there's pretty big demand. I've got most traded zone lined up here because we've seen a lot of accumulation and trade previously at this price. So this is definitely what we would call a positional point, which is very important. And then I have an alert here above this high to really show us that, at least on a daily time frame, which is very important for stocks, that we're getting some kind of significant rally that's starting to come through. At this point, all we can really say is that the market's come down to a new low. It's found a buyer, because you can see that with the wick. So wick will hold a pretty big order. And then we've rallied off that session. So you'd have to say the momentum is actually starting to turn into the buyer's side here on the smaller timeframes. And that's where we would go next. So we would go a 2 hour and then we'd go 15-minute. I still think very difficult to tell overall tie here, but I have done a lot of analysis on this pair. To me, it's all about 195. It's a very important level for it. And at this stage, still the trend is theoretically down. So I would not rule out 165, especially if 5K fails on the stock market, and then we see a bit more discount on Tesla. But I think 165 is a very, very important zone. Like, we're not just talking about a normal zone; it's a big one.
Yeah, no, it's a very, very big zone for it. I agree. And look, the sell-off has been aggressive. Obviously, it's got here in a great deal of haste. But this is why you've got to go to the smaller timeframes to get your clue as to whether this little short-term, burst down could be corrected here. Like, I mean, if you look at this setup, it's not dissimilar to what we saw on the HK50, where, it's trying to bust up above a trend line, hasn't done it yet, but there is an argument for a trend line there on the 2 hour for 20 moving average. If it does that, we're going to see a series of higher highs and higher lows. And it may well push up and get to that level that Tom was talking about with the yellow line there. But if it does that, that's not it's not an absolute declaration that the thing is back at 210 either. That could be the next sell point, especially if that 20 moving average catches up and is actually providing another form of resistance. I think it will. So I
think this is what's going to happen. And if it breaches here, then I think pullbacks will be met by bull demand. At least that's from a technical perspective.
And if it hits the 20 moving average and it doesn't go past it and it starts to reverse from there, then that 165 level, especially that whole zone there, becomes very, very lucrative at that point. I think it's a good trade either side. I'm happy on both levels there. I think there's good dollars to be made.
Here's a stat for you, or for Zachary more than anyone else, I guess, or anyone else likes Tesla. So did you know that we've only ever seen 5 times in Tesla's history? I love my stats. And we've only ever seen 5 times in Tesla's history where we've had a 6-month low with a 5+% gap on the earnings, where it hasn't, it's done that. Now, in every other time, we've seen elastic demand actually pull the markets back up, and they've actually rallied over the next 1 month period. Now, this time so far, anyway, it's been quite weak. And I think for Tesla investors, it's going to be very important because, Ty, remember, 5 times, not a huge amount, but decent amount. And we've always seen elastic demand in the stock after that period. That is basically a capitulation sell into rally. And if we don't get it this time, what's it telling us about investors' confidence underneath? Now, it's just an interesting kind of thought process. Obviously, price action. This is why it's so important to look at the price action. But there's a stat that's that I found out the other day, which I thought was interesting.
It is a very
all right.
I think we're going into a very, very interesting time of the market, and I think a very, very timely time, Tom, for us to start these live analysis market updates, because I think that week on week, I think we're going to start to see some serious action, and we're really looking forward to bringing you the fresh perspective every Wednesday of what is actually happening in the markets. And we're very happy, of course, to take some requests as we did today as the momentum builds with this sort of format. So look, thank you very, very much for joining us tonight. We really appreciate you all for taking time out of your day to share your trading journey with us. We love doing analysis, and we're really looking forward to bringing these to you regularly. And if you liked it and you enjoyed it, please hit the like button to let Pepperstone know that this is a format that they're going to be happy with. And we really look forward to seeing you each and every Wednesday at the same time, where we'll be basically doing the same thing as we did today, but of course with fresh eyes on the new market.
All right, so give it a thumbs up, guys. Thank you so much. We'll see you next Wednesday, same time, same place. Make sure links in the description down below. And we'll leave you with a quick outro. We'll see you in a week's time. Enjoy. Bye for now.
Thanks, everyone.